I'm curious as to whether you think the economy is at least in a decent enough shape where it can kind of hobble on until maybe post-election or into January when maybe we have a little bit more clarity on fiscal stimulus.
Well, I think you got to separate Romaine from being a health crisis and then the political consequences around that. The health crisis, I believe what we hear from some of the doctors that we will likely have a vaccine around year end. It won't be widely distributed and widely adopted. So the health crisis is going to linger on. And I actually think the economy is actually in worse shape than what we see in the statistics. Now, the stock market is reflecting the stay at home stocks, but boy, I'm amazed when you drive around, certainly up and down the state of California, every commercial development has at least two stores that are shut and boarded up. And that kind of damage, and the airlines, that kind of damage is going to take some time. So I think we're still going to have a choppy market as we come to an end of the health crisis.
And what about the choppy market as we brace ourselves for the political volatility we're expecting? It's interesting that Goldman put out a note today saying, hey guys, chill out a little bit. Everyone's getting a bit over-concerned about this contested election. But I remember you were one of the first people who I heard call it, that you were worried about it going past the beginning of November. What are you bracing for now, Chris?
Well, thanks, Caroline. I am still very worried about it. Have been studying it. You've seen a lot of research reports on how it rolls out if the votes are not accepted. I'm particularly worried about Pennsylvania and then Ohio. The amount of votes, the people that vote in person, and then the mail-in ballot, and then all the question about the foreign interference that could happen. It's unfathomable to me that is such a serious risk in the United States of America, but it is, and then the fact that we've already had this rhetoric that they will not accept the results if they're not in favor of one candidate. That's just crazy. So to me, it's still a risk. I appreciate Goldman Sachs' point of chill out. It's not 100% certain risk, but it is a risk, more than zero, which you normally would expect in an election, and maybe somewhere between a 30% to a 50% probability. That's pretty frightening. And I think as you're seeing, and you've talked to a couple of people today, clients and investors are trying to figure out how to protect their portfolio. For us as a giant pension plan, it really comes down to diversification. There's no good hedge for the uncertainty of a contested election and the question about could you have a violent transition of power in the United States. I mean, it's just unthinkable, but that's been raised in the last week.